one rule in sales is don't make assumptions. Don't assume that your clients understand the value, your process, what's expected. Don't assume that a real estate agent understands how you can help them and how you can bring value to them. This was one of the most powerful sales lessons that I learned. How to tell my story, communicate my skills, my strengths, and how my process of being a successful loan officer helped the person that I worked with win. If I'm working with a real estate agent, how do I help them win? How do I save them time? How do I make them money? And how do I cut down their stress? And if I'm working with a client, how do I help them successfully meet their goals? What are those goals? So just yesterday, I got a group of realtors together, and I was challenged to give a 30-minute talk. And I thought, what am I going to say? What is the message that really can add value, that can make an impact, that can squeeze their heart, that they will remember me long after this all-day workshop? How do I stand out and say something meaningful? Well, I started out the talk saying, look, at Guild Mortgage, I believe that our job is to provide value to you, to be your partner. I'm not a girl that runs around and gives donuts and trinkets and does all that kind of stuff, but I want to be that person that when you refer me, I add value to your life. I save you time, I cut down your stress, and I help you make money. And what I look at my job is I'm here to help build wealth for our customers in real estate. Because did you know that by the age of 62 years old, the average American has 80% of their wealth in real estate? 80% of their wealth at 62 is in the equity of their home. So what we do as loan officers really matters to that person's wealth building opportunity, to not only their family now, but their future generations. Are they buying at the right time? Are they selling at the right time? Are they taking advantage of refinance opportunities as they exist? Now that's my job, is to help them realize the amazing opportunity in front of us and to remove obstacles to achieving that goal. So let's first talk about the most important part of a partnership, which is the sales process. The number one thing I do is a pre-approval meeting. Now, you could work with an online lender that spits out a pre-approval online and that gets it to you quickly and maybe has a really sexy rate online. But what happened in that meeting? Did we educate the clients? Was it a sales process where we uncovered their objections, their fears, their dreams? Did that online lender sell the hell out of you as the realtor and why you're the person to help them win? That's what needs to happen in a pre-approval meeting. It is a show, it's a presentation, it's a sales opportunity for us to empower and educate our buyer and make our jobs easier from that point on, because if that didn't happen, where does the burden fall with that online lender pre-approval? It falls on you, the agent, that now has to be the one constantly letting them down and questioning what they're thinking. And they kind of start going, gosh, you know, this agent is kind of bursting my bubble out of the time. You need a partner that is educating on the other side. And that's why we want to work with you and be your loan officer team. So here's what we do in the pre-approval meeting. We ask their dreams and their goals. We want to know what their goals are financially for their payment and their out-of-pocket expenses. We want to understand, what does this home mean to them? Is this going to be a home for 2 years? Is it an investment? Is it a long-term? All of these things are really valuable and important, so we can then advise them on the right mortgage strategy. And we can educate them on the current market and how to win the offer. So that meeting is so important. And one tool that we use in that pre-approval meeting is Mortgage Coach. We run what's called a total cost analysis for every customer, multiple times in many cases, every transaction. So in that first pre-approval meeting, we'll run a total cost analysis to show them the wealth building opportunities of buying real estate, of various purchase prices. Maybe they need a 400, a 450, and a 550 purchase price example. We show them the difference of what it would be like if they waited for a year, or should they get off the fence from renting and buying. That's how we use a total cost analysis to really get people bought in to wanting to buy a house and feel empowered on making a good financial decision. Then we send them out in the car with you, and hopefully, because they've got that education, you get to spend less time with them, more focused time, deeper relationship building time, because that's how we're going to get more referrals from these clients. So we do a total cost analysis of pre-approval. We send them your way, and then they come back and contract. I just met with a client this week who said, yeah, well, I can get this rate online. You know, the bottom line is that every lender in the country is selling their loans to Fannie Mae, Freddie Mac, FHA, and VA, unless it's a jumbo or bond. We're all selling the same rates. We're all selling the same product. So I can lock a borrower today anywhere from 2.5% to 4.5%, but the borrower is the one that needs to choose. So when your client is just going online and find the lowest rate, did that person ask them what their larger financial goals are? Did that person say, are you trying to send a kid off to college? When are you looking to retire? How long are you going to own this house? Let me do a total cost analysis of 3 different options so that we can really weigh out the best decision for you. So I'm meeting with this couple. He is in former military, 30 years. He's kind of gruff and direct and maybe a bit intimidating for one of my teammates. And so they get the district manager on the phone, me, and I go over a total cost analysis with them. We had them locked at a 3.125, and they were getting squirrely that maybe they could get a lower rate online. And I said, of course you can. And you can get a lower rate with me too. Let's go over it. So we did a total cost analysis at 2.875, at 3%, and at 3.125%. All the points are on there, all the costs, the cash to close. And when I got on the phone with them, I had no idea how long they would want to own this house. I was not in that initial consultation, so I prepared it for a 3-year window on the really short side. And we started the conversation there. And then I went on the back end in Mortgage Coach and changed it to a 10-year because they said, Shayla, we just built this house. It's gorgeous. We put everything into it. We'll probably be here for 10 years. And you know what? The cost savings over 10 years, it made sense for them to buy down their rate to 2.875. Had they only stayed 3 years, it would be 3.125. And now the conversation got from, why aren't you like this person online, to, wow, what if it was 5 years? What if it was 3 years? What if we put an extra $50,000 down? And we're playing with all this stuff and having fun. And the conversation went beautifully. At the end, the borrower said, I'm going to have a glass of wine with my wife, spend a little bit more time on this Mortgage Coach, and I'll get back to you. And boom, they were happy. We changed the rate to a 2.875, all terms the same, and we got them closed. That is what a good loan officer does, Mr. and Mrs. Realtor. We don't just say, oh yeah, we have the lowest rate. We actually advise the client. That's how we're going to get more referrals, because they have that kind of experience. They know why they're buying, they're educated, they're empowered, and they had choice. Okay? So let's just talk about this whole rent versus buy, because now we got objections. So I just gave you a scenario where we've got a willing buyer who's taking advice, who meets with us on Zoom or comes in the office. But what about those opportunities that we're getting every day that we pay thousands of dollars on, Zillow, Redfin, Realtor.com, whatever, and the people go, I don't know, it's kind of expensive right now. Maybe I'll just wait it out and see. So the cost of waiting analysis in Mortgage Coach is so powerful, and this is how we can help you get data to your buyers and get them out of being emotional and into being logical. And if you don't have a lender partner helping you do this stuff, then again, you just seem like this cheesy salesperson as a realtor who's trying to push and push and push and shove people to buy something. So you gotta have a partner like me that does this with you. So let's look at this example of a cost of waiting. This is real data from Reno, Nevada right now, okay? The median sales price in Reno, Nevada as of July 2020 was $434,000. July 2021, 1 year later, 22% increase in median home price. We're at $530,000. So I asked the realtors, how many people did you let get away with that objection a year ago? Because you didn't have the right partnership, you maybe were feeling a little lazy that day, or you didn't have the skills or the words or the verbiage to say, I understand how you feel, I felt the same way, even being in real estate, but let's just look at data. And let's let the data tell us, what if it appreciated 10% and we missed out? What if the rates went up a point and we missed out? What if it went up 20% and the rates went up? I mean, I don't know that we would have exactly projected what happened so far because it's crazy, but we can project something and demonstrate the data. Well, here's what happened for all of us realtors and lenders of us that let that objection go, that didn't really dig in and say, you know what my job is to help you build wealth in real estate. So would you give me 15 minutes to run an analysis and look at it with you? I'm cool either way of what you do, but I'm not doing my job if I don't go over this with you. Who's going to say no to that, right? Here's the analysis. The person that didn't buy last summer and waited a year, they lost $98,000 in equity on average. They're paying $98,000 more for that same house a year later. And $11,000 in interest possibly, depending on where rates were there and where rates are now. So, I mean, we're talking $100,000 was the cost of waiting. And if you look at that over a 5-year period, I mean, it's just unbelievable, right? So if I were to look at January 2021, we're at $530,000. Well, let's project a year from now and the market only appreciates 10%. But the rates go from a 3.125 to a 4%. Okay, the borrower would have chosen those rates at that given time. Now what happens, that person lost $53,000 in gained equity. They're paying $53,000 more and $21,000 more in interest over a 5-year period of time. That's a $74,000 oops. I just feel weird. I feel emotional. Guys, this is why we do what we do. You know, you have a single mom that comes to you, or a divorcee, or somebody who's just retiring, and there's all kinds of emotions. What do I do? Where do I live? I don't know what the media is saying, what social media is saying, what my neighbors are saying. When they come to us, that's an opportunity for us to help them build wealth. All those people that we just were too lazy or didn't have the skill set to help a year ago, they missed out on $100,000. And what is that going to mean in 10 years, 20 years, 30 years with compounding interest and growth? This is an important time that we learn these skills, that we use this technology, that we express our value to the real estate agent and what does it mean for them. If I did that presentation 5 times for one realtor with that same objection, how many of you think I would close maybe 2 of those deals that could have just gone away? And to a realtor, if I help them get 2 deals because of my technical ability and my sales ability and my willingness to spend the time, how much money did they make because I know how to do this? Are they going to give me more business? Are they going to be around and be loyal? Are they going to give me some forgiveness when I don't pick up the phone at 7 o'clock at night on any day of the week? Yes, because I represent more value. I'm not the girl that just is always available and answering the phone. What about rent versus buy? What about all these kids that are coming out of college, or they're millennials and now 31, and they're having to look at a $500,000 or $600,000 first-time buy? I mean, it's crazy, right? But the rental rates in my town, you can go Google this so easily, they went up 14% in a year. 14%. You have no control when you rent. You could be evicted, your house could be sold, like you have no control. And you got the same increase. When you get a 30-year fixed mortgage, that's fixed for 30 years, right? Yes, your insurance or your taxes might fluctuate a little bit, but come on, how amazing is that? So showing people in your pre-approval meetings that don't currently own what a rent versus buy analysis looks like, do you think that they're going to be more resilient when they get their offers rejected for the 5th time? Do you think they're going to be more open to coachability and advice with that realtor because we've really shown the value of owning real estate? Hell yes. Are those realtors going to notice how much different it is when a client works with us and how influential we are versus when they work with anyone else? You better believe it. So just check out this rental analysis. If somebody's paying $22.50 a month in rent, and they want to compare that to buying a $500,000 house with 5% down, you get to look at the net rent of these two. In 5 years, you guys, it's $155,000 paid in rent. How often do we say to somebody, wow, you pay $1,000 a month in rent? You know that's 60 grand over the next 5 years. Nobody thinks about it that way. That is a disruptor. That makes people go, oh, I want to puke, right? Great. Now let me educate you. Let me show you how you can build wealth in real estate. Because with that 5% down loan, even with mortgage insurance, your payment is negligibly higher, but when you factor in the tax benefits and you factor in that you're building principal and building equity with every payment, you're actually way cheaper in net payment than paying rent. Are we educating people this? Are we showing this to realtors? Are we giving them talking points so that they can do this with their buyers? So this stuff just blows me away. On the rent versus own, after 5 years on that $500,000 purchase, they will be $214,000 richer, okay? After 5 years. So do we want to let people rent? And do we want to have people scared and emotional and stuck in the media? Or do we want to be influential and give them data that helps people make decisions on building wealth? Guys, we have an important responsibility. We have an incredible opportunity in our industry to change lives. Borrower by borrower, but realtor by realtor, and also teammate by teammate. We help educate people to build wealth. There is no other vehicle that is changing the lives of Americans right now like real estate. It's happened for decades. It will continue to happen. And we need to get darn good at this total cost analysis and these conversations. But more importantly, we've got to get good at selling our process and our skills and our value to that realtor so they refer you so strongly that you're not dealing with the rate shoppers. You're not dealing with the third-time pre-approvals, that they go, my business is different because this person works with it. I get more referrals because Shayla and her team works with them. Go out, improve your skills, learn how to master this conversation. It's not hard. And go out and change people's lives.